morning. It's really wonderful to have this subject to talk about this morning. Of all the product types that we deal with in the investment sales division.
Mike.
Is that working now?
Beautiful.
All right. As I was saying, it is this is an exciting time for the industrial markets. All the product types that we work on in investment sales, really the hottest right now is industrial. And just to give you a sense of the flavor of what's going on, last year there were about $500 million in sales in New Jersey in industrial. The year before there were over $1 billion worth of sales. And in the heyday of 05 and 06, it was approaching $1 billion. So far this year, we logged about $300 million in contract or close, and that's before the big announcement yesterday, MAREJ transaction. So assuming that goes through, we'll be well north of $1 billion in investment sales. And along the way, we're setting records for not only price per square foot, but cap rates. So it is indeed an exciting time. The fundamentals are great in industrial. Supply is coming on, but hopefully we won't do what we usually do in New Jersey and overbuild. And so today we'd like to make today's panel very interactive, to ask the questions you want to ask. We have a great panel, active players in the marketplace. We are -1. I guess Peter got so involved with the Morris deal that he couldn't make it today. He had to go out of town. So, but we have great panelists. And what I'm going to do just to start is let them tell you a little bit about what they do and what they see in the coming year. So we'll go right down the line. Dave, you're up first. Sure.
Hi, good morning. Dave Gibbons. I am with Elberon Development Group. We are, as at least some know here, a family business. We've got about 2 million feet. Most of it's in Elizabeth, New Jersey. We've had a lot of nice success the past couple of years doing some redevelopment in our existing portfolio. Did the Wakefield development in Elizabeth. Did build a super Seabrigo cold storage. Did a 14-acre redevelopment right on the doorstep of the port for East Coast Warehouse. Looking forward, we've got more exciting things in the pipeline. We've got about an 18-acre site in Elizabeth that we're fielding a lot of activity on now. I think we'll be building at least one building later this year. And we see the market is very good and healthy right now, both with the new development and with our existing assets too, which I think is helping the new development as well. The challenge that we're seeing is acquisitions.
My name is Bo Farkas with the Cytex Group. I'm head of real estate development for Cytex. We concentrate mainly in industrial, as you guys may already know. We have several markets, obviously, that we're in across the country, including New York, New Jersey, LA, and obviously Chicago, which is where we were started back in 2001. In general, I'm actually very excited about the market, just like everyone else here, I think. Well, I think everyone else is excited. I'm definitely excited about the market. And in general, what I'm seeing is there's going to be good development activity. Obviously, I drink the Kool-Aid because I'm part of the development sort of team or the development whatever forward-thinking kind of way of going. But anyway, in general, I'm going to pass this over and we'll talk about all the wonderful development we're going to be doing.
Thank you, Bo. My name is Omar Ahmed. I'm with Russo Development. We're a private development company based in northern New Jersey in Carlstadt. We've built 8 million square feet, mostly in northern New Jersey. In the Meadowlands is home for us, so we've done a lot of Meadowlands development. We're a diversified development company, so we do multifamily, we do industrial, and a big part of our business is also data center development. We recently completed a state-of-the-art data center for Bloomberg up in Orangeburg, New York. And we are also very excited about industrial going forward, although have some trepidation about rents, and we'll probably get to that in a little bit, especially as you compare that to acquisition price. We have a couple of large parcels that we have in the Meadowlands, and we can talk about that, which we have marketed for a build to suit. Our industrial portfolio right now is over 99% leased, so we're pretty stable. And I'll pass this on to Dwight.
Good morning, Dwight Angelini. I'm a partner at TA Realty. TA Realty is a Boston-based advisor. We manage about $12 billion in assets under management. We are U.S. only. We do industrial, retail, office, and multifamily. We've been buying in New Jersey since the mid-'80s. In terms of industrial, we're, like everybody, we're excited about it, unless you have my job, which is to buy industrial, and buying from these guys is very expensive these days. So in terms of what we're seeing in our portfolio, occupancy's up, rental rates are moving, and we think for the next couple of years that will continue. After that, on the backside of 17, who knows?